By the end of the decade, what do you think will happen to Tesla stock? Even analysts and professionals have differing views. Some are getting increasingly pessimistic, while others are rather hopeful. However, some people are quite certain that Tesla stock will skyrocket by 2030. It would be unwise for you to miss this. Many still believe that Tesla stock is overpriced, even now that it is selling at over $133 per share. One of the most persistent disagreements between analysts and specialists alike has been this one. Because of this, even though some people think Tesla is pricey right now, the stock may have a lot of opportunity to grow in the future. In fact, analysts predict that by 2030, Tesla's stock may have doubled. According to an analyst, the car industry alone might see a minimum 170% increase in Tesla shares by 2030. Nevertheless, the majority of experts covering Tesla feel that you should purchase its shares, with several projecting a price increase exceeding $1,000. Expert opinions of course differ greatly. The average price projection is approximately $800. The renowned Tesla bull Ron Barron stated in mid-November that he believed Tesla's stock might jump around 650% by 2030 to a $4.5 trillion valuation if the company can really grow to produce 20 million vehicles annually. Barron responded, by excluding robots, driverless cars, batteries, and similar technologies from his optimistic projection, it makes sense why he believes Tesla's stock will grow so quickly. With a cost basis of about $13 and a stake of almost $4 billion, the 20 million yearly EV objective, however, is fundamentally problematic since it has unrealistic assumptions about worldwide EV volumes and market share, in addition to assuming a near monopoly or lack of competition in the developing EV industry. When Barron first outlined his plans for Tesla's enormous earnings, he estimated that if Musk produces 20 million cars by 2030 at a cost of $50,000 each, it would generate $1 trillion in sales and allow him to keep about 30% of operational profits for himself. Barron said that multiplying those $300 billion in operating profits by 15 times brings you to $4.5 trillion. He said the arithmetic works out and that his average car price is fair in comparison to the going rates because Tesla reported an ASP $4,364 in the third quarter. Operating margins were slightly under 20% in the first quarter and fell below 15% in the second, as lower-priced Chinese car volumes increased to 120,576 vehicles during the fiscal quarter. Therefore, in order for Barron's math to add up, Tesla would still need to increase its operating leverage as it grows. The assumption does not take into consideration the introduction of mass-market vehicles priced below $25,000. In theory, these vehicles would have lower margins and larger volumes. Nevertheless, Tesla's ability to meet this aim by 2030 is called into question by a number of significant weaknesses in the 20 million vehicle target, which highlights this assumption. Global car numbers, assuming skyrocketing market share, growing competition, and the expensive parity mass market, and factories required to support such capacity, are the key obstacles to Tesla's 20 million EV plan by 2030. Overall, Tesla would need to almost completely control the EV market or have a hand-over-fist monopoly in order to reach a volume of 20 million vehicles annually. It would also need to boost factory capacity by a factor of more than 6 in order to achieve this goal. Midway through December, Barron expressed his belief that Tesla might reach $500 to $600 a share by 2025, and that the company's valuation could reach $4.5 trillion during the next 8 to 10 years, a figure that does not account for robots. And it doesn't even include driverless cars. That does not include batteries. According to Barron, around $4 billion is Barron's stake in Tesla, spread across multiple Barron capital funds. In some of the funds, Barron's cost basis is as low as $13 as of December 2022. Referring to Tesla shares, Barron predicted that it would reach $500 to $600 in 2025, and that it would reach $4.5 trillion in 8 to 10 years. Musk stated during an earnings call last year that Tesla would be more valuable than Apple and Saudi Aramco combined if it had a $4.5 trillion market capitalization. Barron predicts that Tesla will sell 20 million vehicles annually in the future, as opposed to the 1 million that the electric vehicle manufacturer is predicted to sell in 2022. Barron made reference to Tesla and its CEO Elon Musk, saying in 2030, if he does 20 million cars per year and they're $50,000 a car, that's $1 trillion in revenue. And he gets operating profits at somewhere around 30%. Barron's price target of a $4.5 trillion market capitalization is reached at a multiple of 15x operating profits of $300 billion. That said, if Barron's price projections are accurate, investors may profit in the process. As of right now, $1,000 invested in Tesla stock would purchase 7.5 shares basket, depending on the current price of $133.42. In 2025, if the $500 price target is met, the investment will be worth $2,980. If the price target of $600 is reached in 2025, the investment will be In the following 8 to 10 years, shares may be worth a large amount more in order to reach a market capitalization of $4.5 trillion. The multiple for shares of Tesla is calculated by dividing its market capitalization of $4.5 trillion by its current value of 5 hulls. If Barron's price target is met, a $1,000 investment in Tesla now would be worth $8,487.34 in 2030. This indicates a 748.7% gain during the ensuing 8 to 10 years. This translates into average yearly returns of 74.9 to 93.6% over the following 8 to 10 years, contingent on when Barron's aim is achieved. All of this is speculative, but Barron has been one of the strongest supporters of Tesla and is hanging on to his shares in spite of enormous profits. He is also making another long-term wager, which may entice further investors to join him. Interestingly, over the last 10 years, the returns on the NASDAQ 100 and S&P 500 index have been roughly 348.9 and 187.6%, respectively, while the gains on Tesla stock have been 8,535%. This indicates that the company's share value has increased at a compound annual growth rate of 56.8, indicating a noteworthy return that hasn't always been smooth sailing. Following splits, Tesla's stock value reached an all-time high of $414.50 per share in November 2021. However, a substantial dip occurred in the stock value thereafter as investors became less risk-averse as a result of the U.S. Federal Reserve's increasingly hawkish activities. Investors should therefore be cautious that past performance does not guarantee future results. This means that they should not rely their projections for the price of Tesla stock on past performance. In the first 9 months of 2022, Tesla generated $57.1 billion in revenue, of which $50.2 billion came from the sale of vehicles. Automobiles. In that same time frame, Tesla delivered 908,573 cars and produced 929,910 in total. It is no secret that Tesla has had a difficult year in 2022, with the company's stock plunging to all-time lows multiple times. The fall has been attributed to a number of factors, including China's rigorous zero-COVID policy, the U.S. Federal Reserve's several interest rate hikes, and CEO Elon Musk's full-time participation with Twitter. Even though Tesla has benefited from being the initial entrant in the EV market, legacy automakers are rapidly advancing with significant EV redesigns. OEM spending on EVs is also dramatically increasing. While Hyundai is willing to invest $87 billion for EV development and most recently announced an 18 trillion won or $12.6 billion push for software and EV platform development by 2025, Toyota has stated that it is ready to invest 8 billion yen or around $60 billion in EVs by 2030. With a $35 billion investment in AVs and EVs, GM not only wants to sell at least 1 million EVs by 2025, but it also anticipates that EV sales will turn a profit by that time. By 2025, Volkswagen hopes to have up to 3 million EVs across all of its brands, whereas Volvo just wants 1 million. 4 to 5 million electric vehicle sales in 2025 might be attributed to these three, possibly representing a quarter of the market. Chinese OEMs who produce targets and Fievs are not included in this. By 2023, BYD might sell about 4 million EVs, and by 2025, 6 million. By 2025, SAIC wants to achieve 2 million EVs, while Great Wall wants to reach 3 million. In other words, if current OEMs achieve planned volumes and end up controlling roughly 2/3 of the EV market, Tesla may have trouble reaching its projected 20 million vehicle milestone by 2030. A 20 million vehicle target from Tesla is predicated on the assumption that either the EV market miraculously expands to over 50 to 60 million units by 2030, or that the majority of big OEMs fall well short of their EV plans in a mid-30 million vehicle market. By 2030, Tesla would need to significantly increase its factory's capacity and footprint. In order to produce 20 million vehicles, Tesla can accommodate around 4 million automobiles after Berlin and Texas reach their maximum size by 2024 and have factories for the Roadster and other upcoming models. Tesla would require about 15 additional facilities to reach 20 million vehicles, with development timetables varying from 6 months to 2 years to reach maximum capacity. Between 2023 and 2028, Tesla would need to construct 3 factories a year at an estimated cost of $8 to $10 billion apiece. Tesla has to increase its production footprint significantly, as seen by its necessary growth rate. Tesla will still require a minimum of 7 more facilities, even if they were to replicate Berlin's maximum capacity of almost 2 million cars. Additionally, Musk disclosed last year how Tesla intended to expand its gigafactories. If this comes to pass, production will increase dramatically. Long-term, the EV manufacturer appears to have a bright future, despite the challenges it is currently facing. Investors may look back and regret not purchasing Tesla shares at the current price. To learn more, subscribe to Tesla stock.